This legislation, what it does is it penalizes California states, because what it makes happen is only affiliates such as myself in California are penalized. Every other state can operate just as they want to. So I have to compete against them, and these merchants stop working with me. So their intention is to get the sales tax. The reality is they're going to hurt small businesses. We were calling it a small business tax.
The affiliate nexus tax is not the answer. It's going to keep revenues out of California rather than bring sales tax revenues into California.
So overall, it will be bad for the state of California and bad for small businesses.
A mistake. A well-intentioned mistake, but a mistake.
Affiliate marketers are website owners that earn a living by placing ads on their websites. There are 25,000 affiliates in California and at least 25,000 different types of websites. They range from blogs to shopping comparison sites, newspapers. Any sort of special interest can create a website, and affiliate marketers have ads and make money off of those websites. Affiliate marketers earned $1.6 billion in California in 2009 and paid $124 million in state income tax. Affiliate marketing is actually the only advertising model that grew during the recession in 2008 and 2009. Affiliate marketing is an excellent way for local retailers to increase the traffic coming into their stores. By advertising online, they reach a much broader audience than they might normally reach. Companies like Groupon and Living Social are tremendously successful in driving thousands of new customers into local retail stores. So let's look at an affiliate marketer website. This is kenrockwell.com, and Ken Rockwell is a photography enthusiast, and he attracts thousands and thousands of visitors to his website every month. These are hobbyists and professionals who want to learn about photography tips and the latest and greatest technology. Let's click on this recommendations link, and now we're taken to a page that has a lot of information about various types of cameras and places to buy cameras. Now if we click on this link here, we're taken completely off Ken's site and onto a retailer's site. And this is where the consumer actually makes the purchase. Now if the consumer buys a camera from this retailer, Ken then gets paid for advertising for that retailer. Now as a matter of fact, over 90% of Ken's visitors are not residents of California. They're from all over the country and all over the world. And most of the retailers that carry specialty camera equipment, which Ken recommends, are not based in California either. So for example, one of his visitors may be from Ohio, reads Ken's blog, clicks on a link for this retailer based in New York. And that transaction happens between a consumer in Ohio and a retailer in New York. California has nothing to do with that sales tax collection. However, California benefits from the revenue and the income that Ken derives by advertising for that out-of-state retailer. So that's additional money for California that they wouldn't normally see in that transaction. The affiliate nexus tax is a type of legislation that is designed to get out-of-state retailers to collect sales tax for California. It states that if these out-of-state retailers are advertising on California-owned websites, then they have nexus or physical presence in the state and are obligated to collect sales tax. These out-of-state retailers have a very easy business decision to make. They simply stop advertising on California websites to avoid having to collect sales tax. And we know this for a fact because when similar laws were passed in New York, North Carolina, and Rhode Island, these out-of-state retailers terminated their advertising agreements with these affiliate marketers. These affiliate marketers' incomes were devastated overnight, and the state saw no additional revenue.
Roughly 25% of our revenue today comes from merchants out of the state of California, and a large percentage of those would just stop working with any website in California. It's just a goofy idea.
And if there are 45 other states that don't have this affiliate nexus tax, they're going to work with those affiliates. They don't need us here in California. And so there are a lot of affiliates here in California who are going to go under.
We have 44 employees here in California. I think if we lost 25% of our revenues, it would have a real impact on our staff and on our business.
And I would have to let go, I don't know, maybe 20% of my workforce immediately, because that 25% of my revenue goes away. And I stop growing. You know, I've got 15, 20 open recs right now on top of my 70 that I'm employing today. I wouldn't be able to hire any of those, and I'd probably have to lay off 20% of my workforce.
By instituting an affiliate nexus tax will far undershadow the income taxes they're going to lose. It's not a good idea.
On paper, it looks like it's there and they can get millions of dollars from these out-of-state retailers. The out-of-state retailers are in the driver's seat on this. They will simply sever their relationships with affiliates, thus no revenue will be collected. It's not going to generate what they expect.
So while I understand why the legislature is trying to attract new revenue sources to the state, the affiliate nexus tax legislation does exactly opposite of what they're trying to do. It actually gets no new sales tax revenue and potentially reduces the income of affiliate marketers. So at the end of the day, the state is in a net loss.